So if the West says gold's 2,000, but all of those countries say no, it's 12,000. Thank you very much. It's all going to flow that way, where they can arbitrage in the gold revaluation account. So what does it mean for gold? It's the only other tier 1 reserve asset in the world, and the most powerful players who know the playbook are not only buying it, but repatriating it, removing counterparty risk, the whole issue with the treasuries, pegging it to a new system that doesn't allow for sanctioning, confiscation, and doesn't have one unipolar currency that we all have to be beholden to. I think gold goes higher than anyone ever thinks possible. I think it never comes back down because it is pegged to a new system. How high that is, I have no idea, but I would tell you much higher than people think possible. Be my truthful answer. So when you talk about what does it really mean, it is the beginning of the end of the dollar hegemony, or of the dollar supremacy, because I would argue what we've seen over the last several months, Charlotte, that the hegemony of the dollar is gone, because it's not the only sole settlement currency anymore. We're seeing all sorts of deals being struck in local currencies, as we talked about last time, where China is buying corn and soybeans from Brazil and paying for it in digital yuan, which is then immediately convertible on the Shanghai Gold Exchange into gold. The combined volume of the Shanghai Gold Exchange and the Shanghai Futures Exchange over the last 85, 90 days is up over 200% and has now surpassed the COMEX market in terms of volume of transactions. It's the second most important metals exchange on the planet. So what we see, this little by little by little that I always talk about, logarithmic decay, little by little by little by little by little by little by little, we are chipping away not only at the transactional value of the dollar, as all of these deals used to be in dollars, now they're not, but the settlement status or the reserve status, which has always been U.S. treasuries, well, we've screwed that one up too because we've weaponized it. And if I don't like what you're doing, Charlotte, you can't use the dollars, but you can, and you can, and you can. And it doesn't matter what we do because we make the rules. That's grown thin, and I think it's a problem. And so by weaponizing the dollar, by doing all of these things, we have pushed this union together, where now gold, if you look, not only has it outpaced it over the last 50 years, just now it's outpaced its return, but over the last 25 years, since 2000, gold has doubled the value of the 10-year treasury, the performance, with no counterparty liabilities. So when you see all of these governments buying gold, but equally as indicting is repatriating it, and realize this common settlement currency for all of these transactions in the new BRICS union, where, by the way, at the end of the Novigrad meeting just 2 weeks ago, 59 countries said we're joining, on top of the 10. You're talking the majority of human population. This common settlement currency will disincentivize the need to own and procure treasuries when you can buy gold, which not only has outperformed the treasury market both over the last 25 and 50 years, doubled it over the last 25, but has no counter liability. And the unit says you can keep the gold within your own jurisdiction. It will be independently audited, better not mess that up, but they don't even have to send their gold. So they don't need to trust one another in the respect it's a cooperative endeavor. And in order for a cooperative endeavor to work, you must perform and behave accordingly, not coercively, but cooperatively, which fosters growth and trust and all of these things, which little by little by little is becoming a real deal. And our Western media, Charlotte, they don't do a bad job of telling us what's happening. They do no job. And so most of the people that we love and care about here in North America have no idea what's coming. And you can't get out of the way of what you don't see coming. So to me, this is the rallying cry. This is what I'm passionate about, is telling people, go to the BIS website, download the Project Enbridge white paper, go to the unit website, read their white paper, 50 pages long, it'll blow your mind, and you'll see that this is a real trend in motion.
When discussing the future of gold and silver, it's essential to recognize the underlying shifts in the global financial system. What we are witnessing, according to Andy Schectman, is the beginning of the end of the dollar's hegemony. The dollar has been the world's primary settlement currency for decades, but that status is eroding. For instance, China is purchasing corn and soybeans from Brazil using digital yuan, which can be immediately converted to gold on the Shanghai Gold Exchange. This shift illustrates a significant trend: the decreasing dominance of the dollar in international trade. The combined volume of the Shanghai Gold Exchange and the Shanghai Futures Exchange has surged by over 200% in the last 85-90 days, surpassing the COMEX market in transaction volume. This increase highlights a growing preference for gold and a movement away from dollar-denominated transactions. As more deals are struck in local currencies, the transactional value of the dollar diminishes. The reserve status of the US dollar, traditionally upheld by U.S. treasuries, is also weakening due to the weaponization of financial systems. If a country displeases the U.S., access to dollars can be restricted, fostering a lack of trust. This distrust has pushed nations towards gold, a tangible asset without counterparty liability. Over the past 25 years, gold has doubled the performance of the 10-year treasury, proving to be a superior investment. Moreover, many countries are not only buying gold, but also repatriating it. This action signifies a move towards self-reliance and protection against geopolitical risks. The BRICS countries, Brazil, Russia, India, China, and South Africa, are leading this charge. At a recent meeting in Novograd, 59 countries expressed their intent to join BRICS, representing a significant portion of the global population and GDP. The development of a common settlement currency within BRICS, backed by gold, is set to revolutionize international trade. This currency would eliminate the need to hold U.S. treasuries, further eroding the dollar's dominance. The proposed settlement currency allows each country to keep its gold within its borders, fostering trust and cooperation without coercion. This system promotes a more stable and balanced global economy. The Western media, however, has largely ignored these developments, leaving many in North America unaware of the impending changes. It's crucial to stay informed and understand these global trends to safeguard one's financial future. For those skeptical about the importance of gold, consider the actions of central banks worldwide. The Dutch central bank, for instance, holds gold in a revaluation account. Despite not being able to use it directly to offset liabilities, the gold provides a significant safety net. The Bank for International Settlements, BIS, reclassified gold as a Tier 1 asset, underscoring its importance in the global financial system. Central banks have been repatriating gold since 2017, starting with countries like Germany, Austria, and Hungary. This trend has accelerated, with 2019 seeing the highest gold purchases in 60 years. What does this mean for individual investors? It signals that gold is not just a commodity, but a strategic asset. As central banks accumulate and repatriate gold, its value and importance are set to rise. James Rickards, a renowned financial expert, predicts that gold could reach $27,000 per ounce. Such revaluation would dramatically enhance the balance sheets of countries holding substantial gold reserves. The implications for silver are similarly significant. Silver, often called poor man's gold, has immense industrial applications and is crucial for technological advancements. With the increasing demand for green technologies and electronic devices, silver's value is poised to grow. Like gold, silver offers a hedge against inflation and economic instability. To maximize the benefits of investing in precious metals, consider diversifying your portfolio. Gold should form the foundation, but including silver and other precious metals can provide additional security. Different forms of investments, such as bullion, coins, and mining stocks, offer varied benefits and risks. Stay informed about global economic trends and geopolitical developments to make strategic investment decisions.
There's been a lot of talk lately of comments made by the head of the Dutch central bank. A balance sheet means assets balanced with liabilities, right? That's what it's supposed to mean. It's supposed to balance out. Gold, ironically enough, in all of the central banks is held in an account called the gold revaluation account. You have gold as an asset on this side and the revaluation account on the liability side matching it. So the rules of the central banks is that they cannot offset a liability with their gold holdings. And so they balance it out. You got the asset and the liability. It's the same amount of gold. It's in the revaluation account. Gold is valued on almost every central, first of all, every central bank holds it in the revaluation account. And all of the European central banks, gold is valued at $35 an ounce. It's still the Bretton Woods numbers. So the head of the Dutch central bank said, I know our balance sheet is turning negative, but we have 20 billion at today's prices in gold on the revaluation account. And even though we can't use it, it's nice to know it's there. My feeling is this: all of these countries, what did the BIS say? Gold's the only their Tier 1 asset. All of these countries are buying gold. Who's behind Project Enbridge? Also the BIS. When all of the countries in 2017 started repatriating their gold, starting with the Bundesbank and Austria, Hungary, Turkey, Poland, Czech, Dutch, then the next year, 2018, they bought more gold as a group than they did in the 60 years previously combined, doubled that in 2019, and then mysteriously and ironically, the BIS said, oh, by the way, gold's now Tier 1. You don't think they knew? So what are we seeing now? All of the banks buying up all of the gold, repatriating their gold, and the BIS is involved in umbrage. What did the Dutch National Bank guys say? Oh yeah, we have gold in the revaluation account. I know it's there, so I don't worry about my balance sheet. All of these countries who have been accumulating gold are also accumulating massive amounts of debt. So is it possible that we see all of the central banks involved in this revalue gold to a much higher level? To people who think that doesn't happen, it happened in 1933 when Roosevelt confiscated gold and devalued the dollar by 40%. After he confiscated all the gold, it means gold went up by 40%. But what if they put gold at a level 10,000? James Rickards is here telling people 27,000. Now your balance sheet goes from putrid to pristine, just like that. Now they pass a rule that they can offset each other now, and it's revalued to a much, much higher level. If you don't think that's possible, look what's happening in China right now. Silver right now is over $4 an ounce higher on Shanghai than it is in LBMA and COMEX. Slowly jacking up the price and arbitraging everything that's over. The price is what people are willing to pay. So if the West says gold's 2,000, but all of those countries say no, it's 12,000. Thank you very much. It's all going to flow that way, where they can arbitrage in the gold revaluation account. So what does it mean for gold? It's the only other tier 1 reserve asset in the world, and the most powerful players who know the playbook are not only buying it, but repatriating it, removing counterparty risk, the whole issue with the treasuries, pegging it to a new system that doesn't allow for sanctioning, confiscation, and doesn't have one unipolar currency that we all have to be beholden to. I think gold goes higher than anyone ever thinks possible. I think it never comes back down because it is pegged to a new system. How high that is, I have no idea, but I would tell you much higher than people think possible. Be my truthful answer.
Understanding the broader economic and geopolitical context is crucial for making informed investment decisions. The actions of central banks, the state of national economies, and global trade dynamics all influence the value of gold and silver. Staying informed about these factors will help you make strategic decisions that align with your financial goals. The trajectory of gold and silver is not just influenced by economic policies, but also by political events. The weaponization of the dollar, where access to dollar-based systems can be restricted for political reasons, has pushed countries to seek alternatives. This has led to a significant accumulation of gold by central banks around the world. For instance, the BIS reclassified gold as a Tier 1 asset, highlighting its crucial role in the global financial system. The importance of gold in maintaining financial stability is further underscored by the actions of the Dutch central bank. Despite being unable to use gold directly to offset liabilities, the bank acknowledges its critical role in balancing their balance sheet. This approach is not unique to the Netherlands. Many central banks are adopting similar strategies. The repatriation of gold is a clear indication of the shifting trust in the global financial system. Countries are bringing their gold reserves back from institutions like the Federal Reserve Bank of New York and the Bank of England. This trend, which started in 2017, has gained momentum, with countries like Germany, Austria, and Hungary leading the charge. This repatriation effort ensures that countries have direct control over their gold reserves, reducing counterparty risk. For individual investors, this global trend offers a clear lesson. Gold remains a critical asset for wealth preservation. As nations accumulate gold to safeguard their economies, individuals can similarly protect their wealth by investing in physical gold. This strategy is not merely about reacting to current market conditions, but anticipating long-term shifts in the global financial landscape. Gold's role as a store of value is becoming increasingly important as traditional financial systems face unprecedented challenges. The persistent accumulation of debt by governments worldwide, particularly in the U.S., poses a significant risk to the stability of fiat currencies. The U.S. national debt, now nearing $200 trillion, is unsustainable. The government's fiscal policies, characterized by continuous deficit spending, exacerbate this issue. Inflation is not a transient phenomenon. It is a structural problem that will persist as long as these fiscal policies remain unchanged. The implications of this debt are far-reaching. As the value of the US dollar declines, the purchasing power of savings held in dollars erodes. This scenario makes gold an attractive alternative. Unlike fiat currencies, gold retains its value over time, providing a hedge against inflation and currency devaluation. The strategic accumulation of gold by central banks also indicates a potential shift towards a gold-backed currency system. The discussions within the Shanghai Cooperation Organization, SCO, and the actions of the BRICS nations suggest that a move towards a more stable and reliable financial system may be on the horizon. This shift would elevate gold's importance even further, making it a cornerstone of global trade and finance. For viewers and investors, the key takeaway is clear. The strategic value of gold cannot be overstated. In a world where economic policies and geopolitical dynamics are increasingly uncertain, gold offers stability and security. Investing in gold is not just about protecting against immediate risks, but positioning oneself for long-term financial security. Furthermore, silver should not be overlooked. Often referred to as poor man's gold, silver has significant industrial applications, making it a valuable asset in its own right. As the demand for industrial metals grows, so too will the value of silver. Like gold, silver offers a hedge against economic instability and currency devaluation. For those new to investing in precious metals, it's essential to approach this market with a strategic mindset. Diversification is key. While gold should form the foundation of your investment portfolio, including silver and other precious metals can enhance your protection against market volatility. Additionally, consider the various forms of gold and silver investments, including bullion, coins, and mining stocks, to diversify your holdings further. Understanding the broader economic and geopolitical context is crucial for making informed investment decisions. The actions of central banks, the state of national economies, and global trade dynamics all influence the value of gold and silver. Staying informed about these factors will help you make strategic decisions that align with your financial goals. In conclusion, the value of gold and silver goes beyond their physical properties. They are strategic assets that offer stability and security in an uncertain world. As geopolitical events and fiscal policies continue to shape the global economy, these metals will remain critical for preserving wealth and achieving financial stability. Investing in gold and silver is not just a defensive strategy, it's a proactive approach to securing your financial future in a rapidly changing world. For our American and allied viewers, the strategic accumulation of gold by central banks worldwide should be a wake-up call. The diminishing trust in the U.S. financial system and the increasing debt obligations pose significant risks. Diversifying into physical gold and silver can provide a hedge against these risks and offer long-term financial security. This strategy is not just about preserving value, but ensuring stability in an uncertain world. Stay informed, diversify your portfolio, and safeguard your wealth with strategic investments in precious metals. Understanding these global shifts and positioning yourself accordingly is crucial for protecting your financial future.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today. Link in the description.